Welcome to Alpha Recap, your quick post-market tour of the biggest disclosure stories. I'm glad you tuned in. We recorded this after the close, and wow, there was a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots of Form 8K activity today, and some filings that actually mattered beyond the paperwork.
So, what really stands out here is the sheer volume. There were two camps of filings, a big stack of administrative 8Ks and a smaller set that could change financials or strategy, right?
Exactly. Most companies were just putting exhibits on the public record. Skyline Bank shares, Armstrong World, Paramount Skydance, Dine Brands, IAC, and a handful more. Those are the kind of filings you scan for exhibit detail rather than trade on the headline. But then there were some targeted disclosures that investors should really read closely. Green Thumb Industries, Blackstone's private credit fund note on unregistered equity. National Healthcare Properties and Cogent Communications had concrete operational or capital structure nuggets.
Short reactions, right?
Yeah, that tracks.
Let's break those down. Start with the administrative filings. What's the practical takeaway for listeners?
Most of these were Item 8.01 or Item 9.01 filings, other events and exhibits, plus Regulation FD notices. In plain English, companies were officially disclosing documents and making sure material information was broadly available. The advice? Read the exhibits. That's where the actionable detail lives.
And filing metadata matters too. The accession numbers tell you exactly when the disclosure became public, so it's not just the headline, it's the timing and the attachments.
Right, absolutely. Filing timestamps can matter for event traders and compliance teams.
Okay, moving to the filings with teeth. Green Thumb first. Give us the essence.
Green Thumb filed a material definitive agreement and disclosed a new direct financial obligation. That combination tends to mean one of a few things: new debt to finance an acquisition, growth capital, or a contract that effectively becomes a liability on the balance sheet. The terms dictate whether this is growth supportive or credit negative.
So, investors should be passing interest rate, amortization, covenants, the whole toolbox.
Exactly. Read the covenant language and maturity ladder. In consumer sectors like cannabis, cash flow can be volatile, so a new obligation matters a lot.
What about Blackstone's note on unregistered equity sales?
That one split analysts. Some see it as routine fund activity, private placements or liquidity events for investors. Others worry it could change ownership or dilute stakes, especially in credit-sensitive setups. Again, the exhibits and the buyer identities will tell the story.
National Healthcare Properties and Cogent, those were Item 2.02 filings, right? Results of operations and financial condition.
Yep, those kinds of updates can presage volatility because they convey fresh operational numbers between scheduled earnings. Active traders will likely prioritize those names for a closer look.
Now, one of the day's thematic items was a deep dive on POET Technologies. Walk us through the thesis.
POET was pitched as an undercovered node in the AI data center stack. Photonics for high-bandwidth, low-power interconnects. The company reportedly has a meaningful cash cushion, about $400 million in cash on hand, and industry tie-ups that could help commercialize an optical interposer product.
Optical interposer. Say that again in plain English.
Sure. Think of an interposer as a tiny platform that brings optical and electronic pieces together in a compact module, so signals move faster and use less power. As GPUs and accelerators push more data around, optics can be more efficient than copper for some distances.
So POET gives you a way to play the AI infrastructure boom beyond the big semiconductor names.
Yes, but with a big caveat. This is execution heavy. Manufacturing photonics at scale is hard. You need supply chain maturity, yield improvement, and system integration. The cash helps, but it doesn't eliminate technical risk.
Honestly, I was a bit surprised by this one.
And that's where analysts split. Bulls point to the cash, specialized intellectual property, and partnerships. Skeptics point to long product cycles and competition from big, well-funded component makers. For most investors, this is a speculative, small position idea unless you have deep conviction.
Quick interjection. What about music industry news? Virgin Music Group closed its Downtown Music acquisition and named Peter van Rijn COO.
That's right. It's consolidation in music rights. Consolidation can enhance bargaining power with streaming platforms and create cross-sell opportunities across publishing, licensing, and sync. But without disclosed deal economics, it's hard to model immediate earnings impact. Watch for integration costs and revenue synergies over the medium term.
Spotify and Live Nation were called out as names to watch. Those are the typical streaming and live event peers that could feel the competitive ripple.
Correct. Consolidation changes how rights are negotiated and priced, which matters to streaming margins and licensing expenses.
Let's pause for a couple of very short takes. Big move.
Noted.
All right. Analysts mostly agreed that most filings were administrative, but there were clear disagreement points. Summarize the debate.
Consensus. Most Form 8Ks were routine and require exhibit reading rather than headline trading. Points of debate. POET. Speculative infrastructure upside versus execution risk. Green thumb. New obligation could be benign or risky depending on terms. Blackstone's unregistered sales. Routine fund mechanics versus ownership shift or dilution. And Regulation FD notices. Some view them as housekeeping, others think they can precede substantive announcements.
So how should different investor types act on this flow?
Active event traders should prioritize Item 2.02 filings and new obligations, but wait until exhibits are digested. Long-term investors generally won't change thesis on administrative filings, but tech speculators might size a small position in Poet if they accept high execution risk. Credit investors need to dig into covenant detail for Green Thumb and track the Blackstone note for capital stack shifts. Retail traders, don't trade headlines alone. Read the exhibits.
Amen to that. Practical next steps?
1. Read the exhibits first. 2. Differentiate noise from signal. Administrative filings are mostly transparency tools. 3. Size speculative tech exposure carefully. 4. Reassess capital structure risk when obligations appear. 5. Watch for follow-ons. Regulation FD notices can be a prelude to more news in the next day or two.
Those are crisp checklist items. Any tactical trade ideas from today?
Not trade calls per se, but tactical frameworks. Event traders should set alerts on Item 2.02 filings. Fundamental investors should treat Poet as research-intensive exposure. Credit analysts should demand full covenant copies and run dilution scenarios. And content investors should watch integration signals from Virgin Music Group post-close.
Last little bit. What are the 3 headlines listeners should remember?
First, most Form 8Ks were administrative, but exhibits matter. Second, a few filings, Green Thumb, Blackstone, National Healthcare, Cogent, had direct financial implications. Third, thematic calls, Poet as a speculative way to play photonics in AI infrastructure, and Virgin Music Group's Downtown deal as a consolidation signal in music rights.
Nice. Short reactions before we wrap. Good stuff.
Thanks. And reach out if you want the filings we mentioned.
We will. Okay, final takeaways for listeners.
Read exhibits. Prioritize filings that change cash flows or capital structure. Size speculative bets small and with a plan. And be ready to act when a follow-on disclosure turns an administrative filing into something material.
Perfect. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you after the next close. Take care.